Good morning. It's our first official live edition in my son's 34th birthday, so congrats to us all. Let's get into it. US markets were upbeat yesterday, mainly on earnings. The Russell 2000 gaining a full percent 83 ahead of this afternoon's NFP report. The dollar seems hesitant despite excellent jobless claims, improvements yesterday, and another better than expected improvement in factory orders. A dramatic day ahead as we await the NFP, unemployment, and December's trade balance November. If anyone recalls, it was a bit of a disappointment when the deficit rose to $68 billion rather than contracting to 63%. Analysts are still hoping for that improvement to occur this month. European markets European markets were divided yesterday between the go-getters like the DAX with a 0.91% gain and the losers like the FTSE, which was down by less than a tenth. German equities were up thanks to upbeat quarterly farmer reports, while Dutch and London felt the pressure of BP and Shell lockdown woes as both companies disappointed with their quarterly report cards. The pound is up nicely this morning after Scotland's Halifax Bank reported a 0.3% drop in house prices. The currency has been gaining some momentum after the Bank of England's decision to once again postpone dropping rates into the negative. Governor Bailey says he's hoping still to leave that option open. The bank did say it was limiting corporate bond purchase to £20 billion. Yesterday's drop in gold prices was accompanied actually by a sharp increase in the GBP, which leapt across the moving average, but not quite enough to return to January's bullish channel. A new one seems to be developing underneath it. Asian markets this morning were also mixed. The Nikkei up 1.54%, but the Shanghai Composite down 0.15%. The dollar lost some steam after overnight retail data that missed expectations, with a 4% contraction month-on-month in December. Household spending in Japan turned around for a 0.9% increase month-on-month in December, following a 1.8% contraction the month before. A quick look at the dollar-yen pair reflects that weakening dollar. After spending most of the 8 days in the upper band, we're getting a hefty bear candle plunging decisively into the lower as the RSI heads south. Pair doesn't usually change direction so dramatically, so unless something really important happens today, we could simply be seeing just another retracement. Oil has been taking a slight break before once again attacking the 56.70 resistance level after OPEC Plus members yesterday decided to maintain their output caps. Gold experienced a 2-hour $30 plunge as U.S. markets opened yesterday, putting the metal below the 1800 mark for the first time in 2 months. It then regained about a third of its losses throughout the session, and right now we're looking at a dramatic recovery that's taking the yellow metal back above the 20-hour moving average for the first time this week. In earnings report, Merck yesterday announced a 5% increase in sales, but 83 cents loss per share. Deutsche Bank, Roche, and Philip Morris all showed a strong fourth quarter, pushing the DAX up 100 points. Pinterest revenues increased by 76% year-on-year. Snapchat increased by 62%, shares losing 8 cents per unit, and Ford lost 9% in revenues compared to the same quarter in 2019, saying they would be increasing efforts on electrical vehicles. Danish beer maker Carlsberg reports later today alongside Estee Lauder, BNP Paribas, and Royal Caribbean. With the ongoing Google Capade Down Under, the company today is launching a news platform in Australia highlighting paid-for content. And finally, Lufthansa will be issuing about 1.6 billion in bonds, and UBS, the Swiss bank, not the fictitious broadcasting network, will launch a 4 billion franc buyback program on Monday. All which leaves me with nothing more to say except for see you next week and stay healthy.